This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Focus on fundamentals, from the Fed to jobs to earnings. Why investors are looking less at Washington this week and more at the numbers that really matter.
Lots of likes. Facebook crushes earnings expectations as more people across the globe connect on the social network.
Crash test dummies. Two popular electric vehicles don't make the top grade for safety. We'll tell you what happened and what happens next. Those stories and more tonight on Nightly Business Report for Wednesday, the 1st of February.
Good evening, everyone, and welcome. There was a clear theme on Wall Street today. Fundamentals matter. So does Washington, of course. But today, good old-fashioned numbers on profits, jobs, and interest rates mattered more. Investors had to take into account earnings and whether the results so far this earnings season have been good enough to justify today's lofty stock values. There was also the Federal Reserve, which kept interest rates unchanged and decided to keep the market guessing on when the next rate hike will occur. And then there were jobs and a report that showed private companies went on a hiring spree to start the year. But let's begin with the help of corporate America. We are at the halfway mark of earnings season, and while the results have been positive, there are some hurdles ahead. Bob Pisani breaks it down.
We're just about halfway through earnings season, and the results have been encouraging, with blended earnings up about 7% for the fourth quarter, and revenues are up more than 4%. That's according to Thomson Reuters. Those are pretty good numbers overall. However, there's good news here and bad news. The good news is the 2016 earnings recession is now over. But here's the bad news. Now the hard part starts. The markets are anticipating double-digit earnings growth in all the major sectors throughout 2017. That's a tall order. Is there any chance that corporate America can really deliver on these big expectations? That's what the market's grappling with right now. It's a tall order. And part of the problem with the markets in the last few days is maybe we're entering this period when the market is settling into somewhat more realistic expectations of what we're going to get. Here's why. First, the fourth quarter numbers are up. That's good news, but they're very uneven. Here's my worry. Only about half of the companies are beating expectations for revenues. That's way below normal. Now, that tells me that the expectations are already a bit too high, and that's just the fourth quarter. Second, corporations are being very conservative on 2017 guidance. No one is telling analysts to boost their earnings because of the Trump agenda or outsized global growth. At least nobody's doing that yet. Finally, traders are debating how much real earnings oomph we're going to get from lower corporate taxes. Remember, that's one of the main drivers of this recent rally. There's no doubt corporations will benefit from a tax cut. We all know that. But traders are now realizing that initial expectations that a tax cut could boost earnings 10 to 15% or more are probably too high. Now, finally, there's a much broader macro question the market's grappling with. Can the baton pass smoothly from easy monetary policy to easy fiscal policy? Now, if it can, there might be a smooth handoff, and earnings will rise enough to justify the current prices. But if not, it could be a rocky year for the rest of the markets. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Facebook's quarterly results add to the positive news this earnings season. The company reported better than expected profits and revenue and an increase in both daily and monthly users. The world's largest social network earned $1.41 a share. That was a full 10 cents better than expectations. Revenue up 50% to more than $8 billion as the company continues to benefit from its push into mobile and video. Investors, well, they liked what they saw, sending shares initially higher in after-hours trading, as you see there. Julia Borston has more on Facebook's thumbs-up quarter.
The key takeaway from Facebook's earnings, the social giant outperformed expectations on every single metric, despite tough comparisons. Revenue, earnings, daily and monthly active users all coming in better than expected. I spoke to COO Sheryl Sandberg about what's driving Facebook's growth. She says it's more people joining the community on both Facebook and Instagram, more businesses, particularly small businesses, moving online and bringing ad dollars with them, and product improvements, including more video and the success of Instagram stories. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Private sector job growth got off to a strong start this year. According to payroll processor ADP, firms added 246,000 new workers to their rank and file. That was a lot more than expected, and it was the best single month since last June. And hiring wasn't led by the services sector as it has been. Construction jobs led the way this time, and even the troubled manufacturing sector added 15,000 positions.
The Federal Reserve issued its first statement on interest rates since Donald Trump became president. And while the central bank decided it was not the right time to hike, it also didn't offer many clues for investors as to what may come next. So Steve Leisman did some digging.
The Federal Reserve kept rates unchanged at its January meeting and kept the markets guessing about when the next rate hike will come. The average Fed official is forecasting 3 hikes this year, and markets look for June to be the most likely next month. And the chance of a quarter-point hike fell in March after the statement from around 29% before the meeting to 22% afterwards. In its unanimous decision, the Fed retained most of the language about the economy in its January statement from what it used in December. It said the economy is expanding at a moderate pace, and the labor market has continued to strengthen. It sees gradual rate increases in the months ahead, and it will continue to maintain the size of its $4.5 trillion balance sheet, which swelled up after the financial crisis in an effort to stimulate growth. But the Fed did express more confidence in the inflation outlook. It no longer says inflation is the result of temporary factors like higher energy prices. And in a typical nuance meant to be noticed by markets, it said that inflation will rise to its 2% target rather than it's expected to rise. The Fed also noted more business and consumer confidence, which has shot up in the wake of the election of President Donald Trump. Yet the Fed has not changed its economic outlook since the election, even while markets have soared as it awaits specifics of Trump's policies and weighs possible trade-offs between good and bad policies. All this raises the stakes for Fed Chair Janet Yellen's testimony to Congress, which starts on Valentine's Day, but is not expected with the Republican Congress to be much of a love fest. For Nightly Business Report, I'm Steve Leisman in Washington.
The auto sector is another key pillar of the economy, and today we learned that sales cooled off in January. General Motors, Ford, and Fiat Chrysler all reported monthly declines. And while January is typically a slower month for auto demand, car buyers are purchasing bigger vehicles like trucks and SUVs, which have higher margins. In fact, Ford said its popular F-Series pickup truck saw its best start for the year since 2004.
American manufacturers expanded at their strongest pace in more than 2 years. The Institute for Supply Management said that executives are also more optimistic on the outlook for the sector. New orders higher, and the index rose for the 5th consecutive month.
On Wall Street, earnings, the Fed, and those economic reports helped stocks close modestly higher. While the gains weren't big, they would have been practically non-existent if not for Apple, which rose more than 6% following its quarterly results, which we reported on last night. So here are the closing numbers for you. The Dow Jones Industrial Average rose 26 points to 19,890. The Nasdaq up 27, and the S&P 500 gained just a fraction.
Let's turn now to Scott Minerd for more analysis on the Fed, the economy, and the markets. He's Global Chief Investment Officer at Guggenheim Partners. Scott, good to have you here in person.
Oh, great to be here,
Fantastic. Tyler. We'll get to the Fed in just a minute, but we've been worried a little bit around here about the level of sort of positive anticipation in stock prices these days. Have prices gotten ahead of themselves? Are earnings strong enough to justify the levels that they're at right now? And is there too much good feeling in the markets?
Well, I mean, certainly we're on a sugar high, right? The Trump policies, which are exceptionally pro-growth, should be good for the economy. But now we're going through that arduous task of actually getting it implemented, and we're starting to see some of the difficulties. So I think the market at this point is going to say, well, let's kind of pause here. Also one thing that's interesting is, for some peculiar reason, round numbers are always a problem for the market. So 20,000 on the Dow, I think, is just going to be a consolidation area for a while until we get more promise. But looking at earnings, Tyler, even without the Trump tax cuts, I would expect to see S&P earnings maybe at $135 within the next 2 years. So for investors that are truly investors, even from today's levels, we have pretty good upside left in stocks, but there might be a better buying opportunity.
So in essence, the bones of this market are still good.
Yes.
Right? But we may be poised for a setback depending on the rhetoric coming out of Washington. But the internals of the market still look positive to you.
I think so. I think that, well, I would put it another way. The fundamentals look very good. This is a seasonally strong time, so I don't really expect the market to go crashing down in the first quarter. But on the other hand, I think it's going to be hard for us to keep up with the pace of gains we got in the fourth quarter.
What did you hear from the Fed today? And then bringing it back to stock prices, are stocks able to withstand what I know you expect to be 3 rate hikes this year?
Right. I think so. I mean, first off, the Fed is, in my mind, falling behind the curve. Right? If you look at the real level of interest rates today, that is the rate of interest minus inflation, we were about 0 a year ago. Today, we have real rates of maybe negative 101.5%, which means that the Fed should be starting to raise rates more aggressively, and they're not. So I think the Fed isn't going to be a strong headwind for the market. And historically, when the Fed does start to raise rates, that's usually in response to a strong economy, and stocks have performed well during those periods.
And inflation. For such a long period of time, there was very little inflation in the market, in the economy, perhaps better said. And now we are starting to see a little bit, but not too much. How does that look to you?
Look, I think that a lot of the inflation pickup that we've seen is the energy resurgence, and energy prices are stabilizing here. We're seeing fracking activity pick up, again, going to the Trump policies. These are policies which are supportive of energy, meaning production. So I don't see energy prices adding a lot to inflation, and all energy prices have to do is flatten out. And if nothing else rises, inflation will fall. So while I'm not saying that we're going back to the old levels that we saw before, I think that we're peaking here in inflation on a cyclical basis, and we'll probably see some downside.
And a little inflation is a good thing, right?
I think so.
For stocks.
That's right. And I think it also shows confidence. People are spending money. That's a good sign.
Scott, great to see you.
Great to be here.
Thanks for being with us.
Thank you, sir.
Scott Minerd, Guggenheim Partners.
And down in Washington, the Senate has approved the former ExxonMobil CEO as Secretary of State. The vote for Rex Tillerson was largely along party lines. The nation's chief diplomat will have to deal with a number of issues, including guiding relations with Russia, Mexico, and China.
President Trump will reportedly meet with a large group of CEOs on Friday. According to Dow Jones, the meeting is expected to cover topics like regulation, tax, trade, infrastructure development. This comes as the White House works to develop a strategy to increase economic growth and hiring. The CEOs are part of the president's previously announced Strategic and Policy Forum. It's not clear if all members of that group will be there.
Still ahead, missing the mark. If you are in the market for an electric vehicle, there are some popular models that did not earn the highest safety grade.
A jury has ordered Facebook to pay $500 million in damages. The lawsuit, brought by the game maker ZeniMax, alleged that Facebook's virtual reality unit Oculus was based on stolen technology. The jury found that Oculus's co-founder violated a non-disclosure agreement with ZeniMax. Facebook says it will appeal.
The nation's largest landlord made its Wall Street debut. Invitation Homes, an outgrowth of private equity behemoth Blackstone, priced at $20 a share last night and finished the trading day at that level. The company owns and rents single-family homes. It's not the only publicly traded company in the space, but it is the largest, and it is part of a growing way to invest in the rental housing market. Diana Olick has more.
Does anybody want to give $110,000?
Yes.
$120,000 on the bill?
It was barely 5 years ago that big institutional investors descended on a housing market in crisis, flooding foreclosure auctions and buying thousands of distressed properties. Some thought it was a short-term play, but they appear to be in it for the long haul. Blackstone, one of the biggest players, launched Invitation Homes, a single-family rental company that acquired over $10 billion worth of homes in over a dozen markets. Today, the company went public.
And what we're doing is really bringing a professional experience into housing when you rent a home when you move into the suburbs.
This month, mortgage giant Fannie Mae gave the company and the sector a vote of confidence in the form of up to $1 billion in debt. Fannie Mae already backs multifamily apartments, but for the first time is making the single-family play.
This is a new thing that we're doing, trying to learn about that scale of financing or that type of financing in the rental space.
Others in the market, which include Colony Starwood and American Homes for Rent, have seen their stock rise dramatically, over 40% in the last year. They, too, could benefit from additional capital as the sector expands.
I think the most exciting part for our industry is millennials have not yet entered our space.
Large landlords are still a tiny share of the single-family rental market, but Bartling says he sees room for expansion.
With 15.8 million homes that are for lease in the United States, it's larger than multifamily. There's no reason why this industry shouldn't consolidate to 2 or 3 million homes that are institutionally owned.
The sector is still in its early stages, much like apartment REITs were back in the 90s. And even if home ownership does increase over time, rentals have always been a big part of the way Americans live, and always will be. For Nightly Business Report, I'm Diana Olick in Washington.
The number of people applying for mortgage applications fell last week. The decline came mostly from applications for government-insured loans. According to the Mortgage Bankers Association, total mortgage volume dropped more than 3%, with a double-digit decline in FHA applications.
Increased membership helps Anthem beat street expectations. That's where we begin tonight's Market Focus. The health insurer said higher premiums for its plans led to higher profit and revenue. Anthem also said until policymakers make changes, it's unsure in what capacity the company will participate in the Affordable Care Act. Shares rose 4% to $160.79. Pitney Bowes said weakness in several of its divisions caused profit and revenue to miss estimates. The supplier of office solutions also slashed its full-year guidance, but said its transformation initiatives over the past 4 years will drive its future performance. But shares plunged 17% to $13.14. Cigarette maker Altria saw its profits soar in the latest quarter thanks to gains related to the company's 10% stake in the beer giant Anheuser-Busch. But overall, cigarette volumes continued to fall, hurting sales. And the nation's largest tobacco company said it expects that weakness to persist through 2017. Shares of Altria rose 21 cents to $71.39.
In its first quarterly report since separating from Alcoa, the aerospace parts maker Arconic late yesterday reported profit that missed estimates, while its sales were in line with those forecasts. Following the news, Arconic's largest shareholder, the activist hedge fund Elliott Management, launched a proxy fight against the company, saying it would nominate new board members and seek to remove the CEO, Klaus Kleinfeld, after seeing management, quote, destroy shareholder value. But Kleinfeld says the company's heading in the right direction.
You've seen the results yesterday. The results clearly show improvement on margins in each one of the segments. I think we have a lot of additional opportunities. I'm, on one point, in full agreement with Elliott. There is a lot more we can get as a value, and we'll get it as we have done it in the past.
Shares rose 11% on the session today to $25.28. The investment research firm Bernstein says it is bullish on Corning, but nevertheless downgraded the specialty glass maker's stock from outperform to market perform on the belief that the company's shares are now fully valued. Bernstein also upped its price target on the Apple supplier's stock from $24 to $26. Well, it beat that. They were off 1% at $26.21. And the image publishing company Shutterfly reported disappointing profit and sales as the company saw lower demand for some of its stationery brands. The company also gave weak guidance for the current quarter and announced a new restructuring plan that would result in more than 200 job cuts and an increased focus on Shutterfly's mobile platform. Shares initially tanked as much as 15% in after-hours trading, but during the regular session, they were up a fraction at $51.77.
Amazon has plans to build its first air cargo hub. That decision is part of a strategy to accommodate its growing fleet of planes. The e-commerce company says the move would create more than 2,000 jobs and will lessen its dependence on FedEx and UPS to transport and deliver Amazon packages. Last year, Amazon said it planned to lease more planes and bought a network of trucks. The company releases its quarterly results tomorrow.
New crash tests are raising concerns about the safety of some electric vehicles, in particular the popular Tesla Model S. None of these vehicles now failed the test, but there is room for improvement, according to the experts. And Phil LeBeau has the details.
A new round of crash tests are giving some mixed results when it comes to safety. According to the Insurance Institute for Highway Safety, 2 cars, the Chevy Volt and Toyota Prius Prime, did well enough to earn the designation Top Safety Pick. But the results are not as good for the Tesla Model S, which is popular with luxury car buyers who want an electric model. According to the IIHS, the Model S could have done better protecting the crash test dummy when the front corner of the car was in a collision at 40 miles per hour.
The forces that we measured on the head suggest that an injury might be possible had that been a human being. Similarly, we measured elevated forces on one of the legs that raised concerns about the possibility of an injury to the leg. Neither of these was so high that we would expect life-threatening injuries, but they are too high, in our opinion, to earn good ratings for those body regions.
Tesla says it's made changes to the Model S, which will improve how the vehicle handles front-end collisions the next time the IIHS conducts tests. A spokesman added, "We expect to receive the highest possible rating in every category, making Model S eligible for the IIHS Top Safety Pick Award." Meanwhile, BMW's i3 fell just short of the best rating possible in rear-end collisions. The company defends its electric car, saying the BMW i3, with its carbon fiber structure, is designed to meet and exceed global safety standards. One other thing stands out about these crash tests. None of the electric cars failed any of the 5 types of collisions that were performed. Encouraging news for those considering buying an electric car. Phil LeBeau, Nightly Business Report, Chicago.
Coming up, immigrants are creating new American businesses at a rapid pace. Tonight, 2 of them share their hopes and concerns for their ventures.
Small business owners drive job creation. According to the Kauffman Foundation, nearly 150,000 new businesses per month were launched by immigrants last year. Kate Rogers talked to one who is optimistic about his business under the Trump administration and another who has concerns.
About a year ago, Francisco Garcia decided to launch his business Modern Architecture Services, or MAS for short. The acronym, which means more in Spanish, had him worried.
I was concerned, seriously, about how that could sway potential clients because of having a Spanish name. I'm concerned about that hesitation that I didn't have before.
Donald Trump's first weeks in office haven't helped to ease the Mexican entrepreneurs' fears, with Trump signing an executive order to build a controversial wall along the U.S.-Mexico border, sparking tensions with Mexican President Enrique Peña Nieto. The president also took action on immigration policy, enacting a temporary ban on refugees from 7 majority Muslim nations. While campaigning, Trump also used language some considered to be inflammatory to describe Mexican immigrants and Muslims, even proposing a Muslim ban before walking his plan back.
We can keep them out.
Garcia calls himself an anchor baby, born in the U.S. and raised outside of Guadalajara until age 10. His parents applied for residency in the States, packing their 10 children for a 3-day bus ride to settle in Escondido, California. The entrepreneur now employs 5 people and says he's disappointed in Trump's campaign rhetoric and action on the border wall.
Immigrants come with, I believe, American values: hard work, accountability, perseverance, loyalty to one's family, to one's employees, fairness to others in how we work together. And I just believe that the rhetoric is just an oversimplification of complicated issues.
Immigrants like Garcia have become a driving force in American entrepreneurship in recent years. Data from the Kauffman Foundation found that in 2016, immigrants made up nearly 1/3 of all new entrepreneurs in America, close to a 2-decade high. They're also nearly twice as likely as native-born Americans to launch new businesses. Adnan Durrani, CEO of American Halal and its brand Saffron Road, retails in 15,000 supermarkets nationwide. Despite Trump's anti-Muslim rhetoric on the campaign trail, Pakistani-born Durrani says he finds solace in knowing his brand has grown thanks to support from people of all races and religions. He says as many as 90% of his customer base is non-Muslim.
We have tremendous support among a number of different communities. And to me, you got to look at the silver lining. Trump, in terms of his tax policies, if there's policies here that are going to spur business, then that's what we need to look at as entrepreneurs. And I think we can mobilize. I think we can work with the Trump administration. I think we can augment our businesses. And I'm actually very hopeful.
For Nightly Business Report, I'm Kate Rogers.
To read more about businesses started by immigrants, head to our website, nbr.com.
And finally tonight, a recent hospital stay apparently can't keep former President George H.W. Bush from attending the Super Bowl in his hometown of Houston. The former president and his wife, Barbara, will perform the pregame coin toss between the Atlanta Falcons and the New England Patriots. NFL Commissioner Roger Goodell said he was honored to have them participate, as well he should be.
Looking forward to seeing that. That's Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody. We'll hope to see you right back here tomorrow night.